This week, Learning Saturday, we have two power pack interesting webinars lined up for you. At morning 10 a.m., we have a real estate and fixed deposit, a good combination. At 12:30 p.m., we have special exclusive webinar for Malaysian NRIs, what to expect in 2026. Here we discuss about key trends and opportunities and what you should prepare for. To join these two webinars, kindly click the registration link in the description. We will meet you in the webinar.
At the beginning of a calendar year, we have a set of expectations. We think that a few things are more likely to happen during the year. We imagine what the year would be like, which assets are likely to be safer bets for us to make. In that sense, at the beginning of last year, I was more inclined towards precious metals, more inclined towards large cap equity, more inclined towards consumption stocks, and in part towards financial stocks. I was less inclined towards mid cap. I was extremely cautious on small caps, and I was averse to micro caps. As far as SMA is concerned, I felt it was a strict avoid. This was broadly my thought process at the beginning of 2025. Now, the year is about to end. It's time to take stock and prepare to share my thought process to you on what the next year looks to me. Firstly, no year closely mirrors a previous year. Let's all be very clear about it. So if silver was such a great performer in 2025, the chances of silver repeating this in 2026 are very low. So I would actually shift from a very positive stance which I had at the beginning of 2025 to a very cautious stance at the end of 2025 on silver. My stance on gold is also very, very similar. I would rather be cautious than be aggressive on gold. I think that when gold has beaten equity on a 20-year basis in India, that itself looks like a counterintuitive signal to me. I think I would just play a contrarian based on this data point alone. It's not something that I think makes sense to me. So, precious metals, I would stay away from. With respect to equity, I think that's where the stance has to be very clear and nuanced. I continue to maintain the same stance on large caps. I think benefit of investing in large caps is that it gives you a much better ownership experience in a market like the present one. You are able to invest more money whenever you want to invest in that space. You don't have to be second guessing what will happen because the valuations are neither too expensive nor too cheap. So it's a more acceptable place to deploy capital. And if you deploy capital selectively in that space, I think you will have a better experience in large cap than in other parts of the Indian equity market, even in 2026. Mid cap is a space where there's a lot of over ownership in expensive stocks and a small set of companies that are falling out of favor look interesting. So there's a lot of divergence within that 150 stock pack of mid-cap companies. A very small number of companies may become very interesting in 2026. I would pursue them in 2026. As far as small cap is concerned, I think valuations are still not supporting active investing. Extremely selective stocks, completely bottom-up approach to picking companies is what will work in small cap. I don't advocate investing in small cap mutual funds even now. If you still own small cap mutual funds, I still suggest that you move your money out of small cap mutual funds. I said this at the beginning of the year. I'm saying it again at the beginning of another year. Caution has to be our watchword in small cap mutual funds. As far as micro cap companies are concerned, I would definitely warn you that the cut in valuations can be much sharper than you expect. You need to be very valuation driven, extremely precise in your stock picking if you have to invest in microcap. It's going to be another challenging year, but if you are able to buy the right companies, you are likely to be laughing away to the bank over a 3-year window. So it's not going to be an easy year, but it still is a year when a few opportunities could be very, very interesting. A year like this has actually not given us the kind of pain that I expected at the beginning of 2025. Overall, I think 2025 has been kind to us. I personally think it has been a very, very soft year. It could have been a lot harsher. And that's what makes me thankful to the market. Mr. Market has actually given us a lot of time to rethink our investing, to reimagine our portfolio construction, and to reposition our equity portfolios. Giving us so much time itself is a big boon, but we shouldn't waste such an opportunity. At least in 2026, I think all of us have this great opportunity to rework our portfolios and reposition it towards a better tomorrow. I'm sure all of us can do it and reach a better place in the future. Thank you for watching this video.